In this video, I'm going to walk you through exactly how I would start my day trading career if I had to begin from scratch. Back when I first started, I spent years of my 20s spinning my wheels, thousands of hours confused, wasting money on mistakes I could have avoided if I had understood the foundations I'm about to share with you. My goal here is to give you the simplified framework I wish I had, so you can skip all of that wasted time and start your trading journey properly. The best place to start is by understanding how trading actually works. A chart is simply a visual representation of mass human psychology, showing the constant battle between buyers and sellers. When demand is greater than supply, price moves up. When supply is greater than demand, price moves down. This back and forth creates volatility, and volatility is what creates our trading opportunities. As traders, our job is to identify areas where we can enter at a certain price and exit at a better one. For example, if you bought 100 units of an asset at $200 and sold them at $205, you'd make $500 in profit. On a yearly chart of the stock market, investors might see gains of 10 to 30% in a good year. But if we zoom in to a single day, those same kinds of percentage moves can play out in hours, giving us the chance to turn a $100 risk into $300 or more without waiting an entire year. To begin trading, you need a few essential tools. First is TradingView, where you'll do all of your charting and analysis. Second, you'll need a broker or exchange to actually place trades. For crypto, platforms like Bybit or Blowfin are great. For stocks, many traders use TopStep. Third, you need a trading journal to track your trades and evaluate what's working and what isn't. A simple setup is to have TradingView open on one side of your screen and your trading platform on the other, so you can analyze and execute at the same time. Before you ever start clicking buy or sell, you need to get your mindset right. Trading psychology is the single biggest factor that determines whether people succeed or fail. Most beginners fall into three traps. They think losing is bad, they think being wrong is bad, and they think making money automatically means a trade was good. None of that is true in trading. Losing is not failure, it's simply the cost of doing business. You can be wrong more often than you're right and still make money if your winners are bigger than your losers. And a trade isn't good because it made money, it's good if it followed your plan and respected your risk. That brings us to risk management, which is the math that makes trading sustainable. Before entering any trade, you decide exactly how much you're willing to risk. Let's say $100. If the market moves against you, you'll exit at that loss. If it moves in your favor, your goal is to make at least 2 or 3 times that amount. Over a series of trades, even if you only win 3 out of 10, you can still end up profitable because your winners outweigh your losers. The key is to keep your risk consistent and never let a single trade blow up your account. Once you understand the basics and the math, the next step is technical analysis, reading charts to find high probability opportunities. This includes recognizing trends, whether price is generally moving up or down, using tools like Fibonacci retracements to spot natural support and resistance levels, and watching for patterns like fair value gaps where price often returns before continuing its move. These tools don't guarantee outcomes, but they help you position yourself where the odds are in your favor while keeping risk contained. With analysis in place, you can start developing strategies. This begins with observation, looking for patterns that repeat. Then you create rules around those patterns, test them on past data using features like TradingView's bar replay, and track the results in your journal. Once you confirm that a strategy works over time, you practice it in simulation before moving on to real trades with small size. As your consistency grows, you scale up. Finally, all of this comes together in live trading. For example, I've taken trades where I risked $500 and made over $3,000 in just a couple of hours, not because I was lucky, but because I applied this framework consistently, understanding the market, managing risk, following my rules, and letting probability do the work. Of course, not every trade wins. You will have losing trades. But if you keep your losers small and your winners large, the math takes care of you. That's the roadmap. Understand how the market works, set up the right tools, master your psychology, respect risk management, learn basic technical analysis, and develop tested strategies. This is the clear, repeatable framework I wish I had when I started, and it's the one that will give you the best chance of building a real career in trading.
Welcome to Nomad Money, your go-to community for smart, clear trading strategies. Whether you're just starting or experienced, we provide real-time insights and tools to help you trade smarter, not harder. Join our supportive network, learn from experts, and reduce guesswork with our proven methods. Plus, don't miss out on our free Telegram group where you get exclusive tips and live support. Trade with confidence, trade with Nomad Money.